which companies are the best companies to invest in at the Nairobi Securities Exchange. I'm going to be discussing 10 companies from the lens of dividends yield, basically the 10 companies in Kenya which had the highest dividend yields last year, and also these companies, interestingly, had amazing share price appreciation. Basically, as an investor, you'd benefit from both possible ways of making money in a stock market through dividends and also through share price appreciation. These 10 companies did amazingly well on both matrices. That is why I strongly believe, based on their historical performance, in case these companies continue on the same trajectory, if you invest in them, you're probably even gonna consider retiring early in the mid-term to long-term, because these companies have the upside potential to make you rich. You are all much welcomed to my channel. My name is Afagza Sifuna. And by the way, in case you are new here, down there is a button called subscribe. Click that button to subscribe to this channel, and I will still add it, drop a like on this video. Thank you for subscribing and also liking this video. And with that, at number 10, we have Safaricom. Safaricom is a telecommunications giant in the continent of Africa and is the most valuable company in Kenya. Looking at its metrics for last year, Safaricom has a share price appreciation of 35%. And also, in that 2025, it did have a dividend yield of 7%. It paid a dividend of 1 shilling 20 cents per share. Guys, that is an amazing return on investment. To paint the picture for you, in case you had invested 100,000 Kenya shillings on Safaricom last year, you'd have made upwards of 140,000 Kenya shillings, combining, of course, your share price appreciation and dividends. That's how amazing it is. And the beauty about these companies I'm sharing with you is that most of these companies are mature companies, okay? Meaning, these companies have the potential to continue paying you dividends in future. And then at number 9, we have Co-operative Bank of Kenya. Co-operative Bank of Kenya is an interesting company because it is one of the companies in Kenya which has consistently impressed and even confused investors. Reason being, it constantly pays dividends to investors, and even so, it typically has a high dividend payout. Looking at the metrics for last year, the cooperative bank shares did have a share appreciation of 103%. That is ridiculous. Basically, the share price of cooperative bank doubled over the past 1 year. And in addition to that, cooperative bank did have a dividend payout of 2 shilling 50 cents per share, which placed its dividend yield at 9%. Guys, if for example, you had invested, started last year, 100,000 Kenya shillings on cooperative bank share, it basically means you'd be having upwards of 215,000 Kenya shillings in 1 year, because the share price doubled and also there was an amazing dividend payout. And then at number 8, we have I&M Bank. This is also an interesting firm within the Nairobi Securities Exchange in the banking sector. And I'm saying so because even just based on recent dynamics, I really estimate I&M Bank is going to continue doing well, because just about 2 weeks ago, they did hire a new CEO. In fact, they poached a new CEO from Absa Bank Kenya Limited to I&M Bank Kenya Limited. And also, they did poach the group chief information officer of Equity Bank from Equity Bank to I&M Group. Guys, I&M is making a statement, and this is also attested from the numbers from last year. Last year, their share price appreciation was upwards of 85%, and I&M Bank did have a dividend payout of 3 shillings 75 cents, placing its dividend yield at 8%. Think about it. If, for example, you would have put down 100,000 Kenya shillings on I&M stock at the start of last year, it basically means you would have been having upwards of 185,000 Kenya shillings. That's quite an amazing return in just 1 year, if you think about it. And that is company number 8 on this list. Company number 7, we do have Equity Group Holdings. Last year, Equity's share increased by 74%. Yes, that's how amazing it was. Over the past 1 year, Equity's share appreciation has increased by 74%. And then in addition to that, Equity did have a dividend payout of 5 shillings 75 cents, having a dividend yield as a result of 8%. Guys, that is also an amazing return on investment, because think about it, your share appreciates 74%. In addition to that, you also have a dividend yield of 8%. That tells you if you had invested 100,000 Kenya shillings on Equity share at the start of last year, you'd be having upwards of 180,000 Kenya shillings. That is an amazing return on investment too. And then the share or stock number 6 on this list, we have the stock of KCB Group. Its share last year appreciated by 75%, which is extremely amazing. And also last year, KCB had a dividend payout of 7 shilling per share, placing its dividend yield at 8% too. Guys, this is also something outrageous if you think about it. KCB did have a yield upwards of 8% and its share appreciated 75%. That tells you if you had invested, for example, 100,000 Kenya shilling, you're going to have made upwards of 180,000 Kenya shilling, over 80% increase in your initial investment, combining both capital gain and also combining your dividend, which will be paid by the company as declared through the interim and final dividend. And then the stock or company which we have at number 5 is the stock of NCBA Group. Last year, NCBA share increased by 39%. They had a dividend declared of 7 shillings and 10 cents per share and placing their dividend yield at 9%. Think about it. If you had invested 100,000 Kenya shillings on NCBA share last year, at the start of last year, it's going to mean just from share appreciation, you'd be upwards of 139,000 Kenya shillings. Combine that with the dividend yield, you'd be at upwards of 145,000 Kenya shillings, which by the way, guys, is an amazing return for you investing 100,000 Kenya shilling. Okay? And then at number 4, we have the shares of EABL. EABL is an interesting and amazing company on this list. Reason being, EABL is in the space of beverage. EABL sells the most beverages in Kenya, and of course is part of the Diageo Group, which sells beverages worldwide. Last year, EABL did amazing numbers because just looking at the share appreciation of EABL did appreciate by 29%. They had a dividend payout of 8 shilling per share, placing EABL at number 4 because their dividend yield was at upwards of 4%. Look at it this way. This company is one of the mature companies in the market, which has been doing amazing numbers, and that tells you it has the potential to continue paying out dividends and paying out dividends consistently, also as its share appreciates based on business performance. Okay? And then at number 3, we do have Stanbic Holdings. Last year, Stanbic's shares appreciated by 66%. Think about it. 66% share price appreciation. They had a declared dividend of 22 shillings per share. And that placed dividend yield of Stanbic Holdings at upwards of 14%. Guys, that is ridiculous. That is out of this world. If you think about it, a dividend yield upwards of 14%, that tells you if you had invested 100,000 Kenya shillings on Stanbic Holdings, you're going to end up making upwards of 180,000 Kenya shillings. That is how ridiculous it is. And by the way, the top 3 stocks in the country did have a ridiculous dividend yield. That's why I'm very upbeat about these top 3 stocks in the country. And I strongly believe even in future, they have the potential to continue making you money. Okay? And then at number 2, we have the stock of Standard Chartered Bank. Last year, the share appreciated by 13%, and Stanchart had a dividend payout of 31 shilling per share, placing its dividend yield at upwards of 15%. Look at this, guys. From the face of it, it might seem like Stanchart's share appreciation was very low, 13%. But then again, the magic with Stanchart kicks in when it comes to its dividend, because despite the share volatility in the market not really pushing the shares up, the company had robust results as it's had over the years, and it did share a good portion of its profit with shareholders. That is why it had a declared dividend of 31 shillings per share, culminating to 15% dividend payout. That dividend yield of 15% is very amazing and doing extremely well. And then on top of the list, we have BAT, the British American Tobacco, which of course does sell cigarettes. Last year, its shares appreciated by 59%. And listen to this, BAT did declare a dividend of 70 shillings per share, total dividend of 70 shillings per share, of course, combining both interim and final dividend. And with that, it does place BAT's dividend yield for last year at 16%. Guys, I don't know what you think about this, but this is absolutely nuts. Dividend yield of 16% is absolutely nuts. Those are the 10 companies which I strongly believe did well over the past 1 year, and they have the potential to continue doing well. Reason being, the amazing thing about the Kenya stock market is that the companies listed at the NSE, most of them are mature companies, meaning they have already gained stability in the market. They have unique competitive advantage in the market. And chances are, most of these companies are going to continue being profitable. Most of the ones are listed on this particular list. That's why I strongly believe these companies are going to continue paying investors dividends, and chances are they're going to maintain or even surpass their current dividend yields. Combining that with the possibility of share price appreciation, it means you as an investor, you'd even occasionally be dancing at upwards of 100% return on your investment, depending on how, of course, the economy performs and also the individual company performs. What do you think about this list? Do you believe the shares I've shared with you have the potential to make you rich? And if you invest wisely, you utilize compounding, whereby you don't cash out your returns on dividends or whichever other returns on your stock. Over the years, you are plowing back of your returns. It's going to enable you to see your stock increase in value incredibly. And even you might consider retiring in the midterm to long term. Comment down below. I strongly believe it is possible. And as I've said, this video is for educational purposes. Do your own research before investing. Cheers, guys. Catch up in the next video. Take care.